Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. One sector that is in focus is the sugar sector. Like the way the mothers of this day and age say, the kids are on a sugar high. That's exactly what's happening with the sugar companies as well. The kind of run that they've seen since 2021 to now has been fantastic. Joining us on the show to discuss what's happening is Mr. Atul Chaturvedi, Executive Chairman at Shree Renuka Sugars. Mr. Chaturvedi, good morning and welcome to the show.
Thank you. Thank you very much for inviting me.
Always a pleasure to speak to you. Overall, Mr. Chaturvedi, one trend that we have been witnessing in terms of the global sugar prices is it's been on an uptrend and it's already reached multi-year highs. What's the sense that you pick up on that front, and how is India mirroring the same, or we are still not mirroring that kind of a price movement?
No, on the international front, as far as raw sugar prices are concerned, Brazil has always been the leader as far as raws are concerned. But Brazil this year, even though they've had a massive crop of something more than 600 million tons of cane, is struggling big time as far as logistics is concerned, the local logistics. And Brazil has had a advantage of plenty or problems of plenty this year as well in terms of their soya crop. Soya crop also is something like 155, 56 million tons. So it's a huge strain on their shipping and shipping out the goods from that country. And the rains have been there reasonably all across in the last couple of months, so which has also hampered logistics. This has resulted in white sugar prices moving northwards. And you see London touching something like $700, and that is getting reflected in the world values. As far as India is concerned, India exported about 6.1 or 6.2 million tons of sugar, and which is what the level was at which the government capped all the exports, and largely to protect the domestic market. As far as the Indian domestic market is concerned, it actually does not mirror the international scenario in totality. But in sympathy with the world values, Indian values have also moved a bit. I won't say fully, but maybe in the last couple of months, we've seen prices inching up by about almost something like 2 rupees a kilo, or something like 2,000 rupees a ton. So that is manna from the heaven as far as the Indian sugar sector is concerned. And that is getting reflected likely to get reflected in improved earnings in this off-season months. And plus the talk of El Nino and all, whatever we are listening to, that is also contributing towards some price increases. And summer months are generally the period when the sugar values move a little northwards as far as India is concerned. But they are still not mirroring the world values.
Right.
Back to you.
Thanks. So that's the way the price trend is looking like. But clearly, how are we looking at the impact of a delayed monsoon? Because Maharashtra, UP, clear areas where the monsoon has been delayed. Uh, how do you think will it impact the production with regards to the next season? And what's the cascading effect it could have on the potential exports for the next season?
I'll answer your question in two parts. One is India is now structurally a surplus sugar producer. The fact of the matter is that this year also we will be diverting something like about 4.5 million tons of sugar towards ethanol. And our production is likely to be closer to anywhere between 32.75 or 32.8 million tons. So if you talk in terms of sucrose, so our production is reasonably high because our domestic consumption is not more than 27 and a half. So even if India suffers a little bit of a blip as far as production in the next season is concerned, Indian consumer would largely remain insulated. But having said that, government is quite cautious as far as the sugar values is concerned, and that's the reason that they have kept the local values. And the exports for next year, we don't think it's going to be a reality, at least in the last quarter, in the first quarter of next year. So that is the period. And secondly, India is going to have elections, and we must not forget that 2024 is an election year. And inflation in any commodity or staples is a dirty word as far as government is concerned. So we do not see too much of a price increase, but yes, definitely the prices will remain relatively supported as we would like it to be. But as far as the production is concerned, I would not hazard a guess as of today, because IMD still says that we will have a normal monsoon, and El Nino, if it really hits us, would probably be in the last quarter of this year. But having said that, to achieve last year's production or current year's production level, I think that would remain a big challenge, because Maharashtra and Karnataka both are experiencing heavy lack of rains. And I believe in the next couple of days, the rain event is going to happen. But we're keeping our fingers crossed.
Absolutely. So overall, Mr. Chaturvedi, from what we are seeing now is, we have to remember elections, absolutely, a key point to watch out for when you're talking about the commodities markets overall. Do you think that could be a factor which could actually go ahead and put pressure in terms of sugar prices? I know you did mention that you're confident that there will be support coming in, but is that a slight risk of pressure coming in there? Because automatically, when you're not exporting as well, when the export numbers are lower, the margins automatically come into pressure, taking the delta on the price front into consideration.
No, your point is very well taken. But one very big outlet as far as the sugar sector is concerned is ethanol. And what we are seeing is that the government aim of achieving about 10.16 billion liters of blending at 20% by 2025 on the strength of grain ethanol is not going to probably happen. So the target as far as sugar is concerned, sugar ethanol is concerned, was supposed to be 5.5 billion liters. But if government were to achieve 20% blending, they will necessarily have to push more sugar ethanol into ethanol into blending. And that would probably mean that this 5.5 billion liters of target, which they have set, they will have to probably revise it to about 7.5 to 8 billion liters if India were to achieve 20% blending. So that is very much on the cards. And with grain prices moving northwards, grain ethanol or damaged grain ethanol, I'm not too sure whether it's going to fill the gap. Right. So 4.6 from grain ethanol may not actually happen.
Right. So, as you mentioned about ethanol as well, yes, 20% by 2025. Now, to achieve that 20% by 2025, clearly around 1,060 liters of ethanol is something that would be needed. Now, for this, the country needs to have at least 1,700 crore liters of capacity, taking that, the efficiency is only 80% with ethanol plants, right? So currently, what is that trend looking like from an industry perspective? How far how far is the industry from reaching that target from a production perspective? Mr. Chaturvedi, are you able to hear me? Mr. Chaturvedi? I think we've just lost Mr. Chaturvedi. We'll just come back to him slowly soon. But clearly, the key, as Mr. Chaturvedi was actually mentioning, was that even if there is an impact of monsoons, there's still some hope coming in there. Elections, because 2024 is an election year, is an absolutely important year as well, taking the commodity basket as a whole. And clearly, taking blending of 20% of ethanol by 2025 goes, that is something which is going to come in as a support as well to the sugar industry. In fact, we have Mr. Chaturvedi who is back with us as well. Mr. Chaturvedi, my question to you was clearly from an ethanol capacity perspective, to get to 20% blending as well, what I was reading was little over 1,000 odd crores of ethanol is what would be required. And to actually get that as an output, the capacity for the country should be at least around 1,700 or crore liters. For Shree Renuka, currently, I think we recently increased our production capacity as well. So, how much of our revenues are now coming in from ethanol, and do we still see that going up further?
No, definitely. In fact, as far as Renuka is concerned, we've got two revenue streams. One is from the port-based refineries, where the model is we import raw sugar under advance license and then re-export with value addition. So if you remove that portion of the revenue stream, then from the milling side where the all these distilleries are located, our revenue from ethanol this year is likely to be in the region of anywhere between 40 to 45% of the milling side revenues. So I think we are on track, and we have ramped up our capacity from 720 KL to about 1250 KL. And during season time, we are also actually able to run at about 125% of our capacity, because during season we use cane juice, which helps in augmenting the capacity. So our effective capacity during season becomes something like 1400 KL per day. So that's a sizable capacity.
Right. So that's with regards to capacity on the ethanol front. If you see from a pricing front as well, how are ethanol prices moving? Because there as well, we are seeing some good increase coming in.
No, we have not seen the increase
No?
coming in lately. In fact, we are expecting increase to come in.
Okay.
Now with sugar prices moving a little northwards, and in North India, you find sugar selling at about 37 and a half or thereabouts. And even in Karnataka and Maharashtra, it is closer to about 36 rupees. So the difference or the delta between ethanol and sugar is actually shrinking. So our take is that the government will have to probably revise the ethanol values going forward, and that is also should not be no-brainer, because ethanol from cane is one subject which does not require any subsidy. Unlike grain ethanol, sugar does not require, and the government is buying ethanol at around 65 rupees a liter or thereabouts. And as a consumer, we're paying 110 rupees. So there's no element of subsidy. So the government should not shy away from increasing the value of ethanol. And that's what we expect and hope as well. Yeah.
Right. My other question coming to you was, I was just reading about the government extending the interest subvention scheme until the 30th of September. Number one, has this happened? And number two, if yes, how does it impact or benefit the industry?
No, actually, it's a kind of uh, putting things in the right perspective as far as government is concerned, because the interest subvention scheme dates back to various periods, 2018, 2020, 21. So all those schemes were there, and various industries were in various stages of completion or getting financed or not getting financed, because the government had actually given a lot of in principle approvals. So what now they have done is they've clubbed everything and said by 31st of September, you need to get these banking sanctions in place, and within 2.5 years of that, you need to put up your units. So I think that should help some of the projects which were in various stages, or not really stalled, but which had slowed down. So that would help in augmenting the ethanol capacity. But having said that, what is more important going forward would be that the cane area and cane productivity also should increase so that the raw material availability remains strong.
Right. And overall, my last question coming to you is from a business perspective, the kind of cycle that we've seen, the kind of turnaround that we've seen in the sugar industry, how are you viewing that? Is that something which you're seeing will continue, or is there something which could come in as a risk factor, say from say another 2 to 3 years perspective? Is this a cycle?
Now, India has actually gone beyond the cyclicality of the sugar
Hmm.
industry. Sugar in India, unlike in the past, is no longer a cyclical industry. And the reasons for this are quite a few. First, the farmer gets best returns out of cane vis-a-vis the competing crops. So the farmer is absolutely gung-ho. His payments are secured, and over the years, his FRP or fair remunerative prices have also gone up, more or less in tune with the market forces in the domestic markets. So all that has ensured that the farmer's interest would actually remain strong. The other thing is that over the years, India has also improved its irrigation facilities. UP is largely unaffected by lack of rains. Maharashtra and Karnataka have augmented their irrigation facilities, which ensures that the impact of drought is not all that great. And one more subject on which the industry used to suffer big time in the past was you would crush for 4 5 months and then carry that sugar for another 12 to 14 months. And we were actually working for the banks. But that position has eased quite a lot with this uh, game changing ethanol play. So, ethanol play has ensured that during the season time, the stock buildup doesn't take place, and the industry is also able to improve its cash flows. So, all these things, in my view, should make sugar a sunshine sector. And I would again reiterate that I do not call sugar as a sugar sector. I now call it as the energy sector. And having said that, the world play is also reasonably strong. And the world values in the next couple of years, and if India is not going to be exporting big time, is also going to remain strong and firm, and that should help the Indian domestic values as well.
Absolutely. A transition from being a commodity to a energy sector, that's a great connotation coming in there as well. Thank you, Mr. Chaturvedi, so much for speaking to us at BQ Prime. Great insights about the sector that we've picked up. Stay safe and speak to you soon again.
Thank you. Thank you very much for having me on your show.
Always a pleasure. So that's with regards to the sugar pack as a whole, which has been in the limelight. And we have seen some good moves that have come in. And the transition also has been pretty strong. And it's the ethanol blending that has come to the rescue as well for the sector at 20% blending by 2025. But as Mr. Chaturvedi was mentioning, the delta between sugar prices and ethanol prices, that's something which is narrowing. So that could be a point of concern. But probably you would see that uptick coming in by the government on ethanol prices as well. That's all that we have on this side. Thanks for watching, and lots more lined up on the other side. Please stay tuned.